Welcome to FYI, the For-Your Innovation podcast. This show offers an intellectual discussion on technologically enabled disruption, because investing in innovation starts with understanding it. To learn more, visit ark-invest.com.
ARK Invest is a registered investment advisor focused on investing in disruptive innovation. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions. It does not constitute, either explicitly or implicitly, any provision of services or products by ARK. All statements made regarding companies or securities are strictly beliefs and points of view held by ARK or podcast guests, and are not endorsements or recommendations by ARK to buy, sell, or hold any security. Clients of ARK Investment Management may maintain positions in the securities discussed in this podcast.
From ARK Invest, this is FYI, the For Your Innovation podcast. I'm Brett Winton. With me today, we have Nick Grous and a wonderful interview. Nick and Cathie Wood, our fearless founder, interview Vlad Tenev, the founder and CEO of Robinhood. Nick, when you look at companies, how important is kind of like founder vision and ambition? How do you think about kind of Robinhood and its ability to be where it's at as a result of kind of Vlad as a leader, and how does it compare to other companies you look at?
Yeah, it's a good question. I think when you have a founder at the helm, especially when you look at a company like Robinhood, but plenty of examples of founders still being at companies, Zuckerberg at Meta, you have Elon, Tesla, you have a lot of these founder-led companies. I guess Elon's not necessarily the founder, but feels like it. In being able to drive long-term vision and defining the market that they're going after, you typically will find that the founder is still at the company defining the market that they're in. And I think Robinhood is a perfect example of that, where you have a company that went out and wanted to democratize the brokerage landscape after having looked at, what E-Trade and some of these other earlier companies were doing in the online brokerage space. And then bringing that same ethos to now the entire digital banking suite of products that they're rolling out, and committing to that vision from day one, and then being able to stay with it after a decade plus. I really only think you get when you have the same visionary founder at the helm, which is the case with Robinhood and Vlad. And I think you see that in the interview that we conducted with him. I mean, he's not thinking about tomorrow. He's thinking about what this landscape will look like and how it will change and how Robinhood will help it change in the next decade. I think everything they're doing is to position the company to be ahead and to be pushing the boundaries of market dynamics, of brokerage space, of tokenization we get into, of the banking side, right? What does the future of a digital bank look like? Is it what we have been used to with JP Morgan and their applications on iOS and, what we're kind of accustomed to today, or is it something entirely different? And I think it is different. And you will hear that from Vlad in the way that he speaks about what's happening today.
So we have a kind of thesis on digital wallets, and you've said that Robinhood Gold is, I think, the best consumer, you say it in the interview, the best consumer subscription available across the board, even better than Spotify. Right. Did you think there's a future in which, I think of Amazon Prime, where there was a subscription service that didn't exist that suddenly became a default that most people have? Is that what Robinhood Gold looks like in the future? Are we going to be in a future landscape where everybody is paying a subscription for a digital wallet, and maybe a lot of them for Robinhood?
I do think that and Amazon Prime is the perfect example, because they've actually, I think, spoken outwardly about wanting to mimic what Amazon did with Prime in the financial services space. And you'll hear the way that I frame it, and trust the source, because I'm very biased. I've been a Robinhood customer. It was my second brokerage account, because they didn't exist when I originally could get access to the brokerage and the financial world. But once they did, I was there. And so I think if you look at what they're doing with Gold, $5 a month, that's dirt cheap. And I give the example, you can actually make that back if you were to just have a certain amount of cash sitting in the wallet and on Robinhood, or if you're using your credit card, 3% cash back if you have access to it today. I think the value that is packed into this $5 a month subscription is like nothing we've ever seen packed into really any subscription service. Again, you can make claims on the consumer side. You get a lot of use and joy and entertainment out of Netflix and Spotify. But I think when you're talking about your personal finances, what are some subscriptions today that we're accustomed to? Credit cards, great example, right? If you get into the higher end premium credit card space, you're paying an annual fee for some level of accessibility. So, you're getting not just your credit card and the rewards that it spits off, but, you look at Chase Sapphire, I think is a good example on the reserve side. They just bumped up, I think it was a $550 or $550 a year subscription to the Chase Sapphire Reserve. Now it's going to $750. But the way that they show it is, you're getting $1,600 worth of rewards out of that. And I think that's what Robinhood is doing. But it's not just limited to the credit card, right? It's this all-encompassing financial super app or financial ecosystem that they're building around. And when we've looked at the space in the financial and digital wallet space, we've looked at P2P, we've looked at the brokerage, there's all of these different places to start, crypto, you name it. But I believe that owning the brokerage is really the best place to layer on additional product. As in, if you can own the consumer brokerage account, which are typically the stickiest assets, and you can even, in the podcast, Vlad gets into, transferring from account to account is an extremely broken process, right? You need paperwork, you need to deal with multiple different parties, all of this to just move money from one account to another. And even then, Robinhood has success because they've tried to automate as much of that as possible for someone wanting to bring dollars into Robinhood. But once you have those dollars, it's extremely sticky. And so being able to layer on financial services, the credit card, the banking app. So you can think about your, debit cards in the future, your checking, your saving, direct deposit, all of that, which has been more commoditized than I would say the brokerage space, just for a number of different reasons. If you own the brokerage, you now own the stickiest assets. So your ability to move in this very competitive landscape, I think, puts you at a very advantageous position compared to other companies, which Robinhood owns the brokerage account for most millennials and Gen Z because they've been mobile first. They met the consumer where the consumer was headed. And so they now sit in a very strategic position to build out this financial super app, which is now what you're seeing from them.
The way we've thought about digital wallets is there's the playbook that kind of like the Tencent has followed, where you have a super app that kind of like sits at the front end of all your transactions. And then there's an emerging playbook that is everything becomes financialized as kind of crypto assets or digital assets spread throughout the world. And you and Cathie talk in the interview about Robinhood's pivot from just facilitating the buying and selling of Bitcoin and Ethereum on its platform alongside other assets to post this cycle, they've clearly moved into investing in the underlying infrastructure for tokenization of, initially equities, but he talks about potentially real estate and fine art, so that everything can live in that brokerage app that they're in control of. How do you think about that transition? And as kind of the consumer analyst, like looking across kind of the pond into the smart contracting and crypto asset space, how do you think about Robinhood's positioning there?
From looking at it from a consumer lens, what's really interesting, and I think what Robinhood does get credit for, but probably not enough of, and I don't know that they could ever get enough credit for it, is making a financial app feel like a consumer app. Actually, they actually get some backlash for making it feel too gamified, right? You hear, oh, well, you shouldn't be offering this, or you shouldn't make it this easy to buy and sell and trade options. Retail shouldn't have this broad-based access, and you shouldn't make it as easy and fun and gamified as Robinhood has. And I couldn't disagree more. You'll hear Vlad, he disagrees. And I think applying that to the crypto space, to tokenization itself, is going to be extremely extremely valuable because again, maybe just my opinion, but what is holding back crypto from mainstream adoption? It's this focus on, the underlying payment rails are exciting to everyone. And we need to understand all of the nitty-gritty of what is happening on the blockchain instead of wrapping up that extremely important technology and building a very consumer-centric application on top of that. Because the reality is the majority of people, mainstream, how you go from, the 10% to mass adoption, do not care how money goes from your account to where you're sending it, right? That is lost on most people. And I think when you can abstract away the complexities of crypto and build something that is consumer focused, then that's how you go from 10% to 50% penetration. And I don't know that there's another company that's better equipped to do that than Robinhood.
Well, you'll hear the vision straight from Vlad's mouth coming up in the podcast. Enjoy the conversation. And Nick, thanks for bringing Vlad on.
Yeah, no, it was a pleasure. And I hope everyone enjoys the conversation as much as we did.
Vlad, it is such a pleasure and honor to have you on our podcast. And I was reminiscing in preparation for this about one of the times we actually were at a conference. We each had done our own panel, and you were getting off the stage, and we both knew we were in one hell of a bear market for innovation. And you said, we're going to be fine. This is going to make us so much better. And I think that's absolutely true, don't you?
I do. Yeah. I think our fates have been intertwined in some ways over the past few years. So I think we've gotten much stronger as a company. Maybe you'd agree with ARK as well, by having not just gone through it, but come out the other side as a stronger, more diversified, more established business.
Yeah, and I think you're a leading indicator because I think you've tripled relative to your lows, and we're a little bit behind that, certainly with our flagship fund, with some sectors still not cooperating, but you're flying. And yes, it made us stronger as well and bonded us together as well. And now we are on the other side, we believe. We really do believe, especially with this new administration, that deregulation and incentives for innovation are going to cause an absolute explosion and innovation of all kinds. And you're right in the middle of it. So maybe we'll start there and, talk about what is your grand vision for Robinhood? Are you thinking about an everything app, a global bank, or is that not capturing what you have in mind for Robinhood long term?
Yeah, I think that I can go through it at various sort of like degrees of granularity. I think at the highest level, Robinhood operates kind of at the intersection of capitalism and democracy, right? So if you're at the intersection of capitalism and democracy, we can kind of like fish there and become relevant. And I think it's very American in a way, but these are kind of like the American ideals that have come under attack and been questioned in the past few years. So maybe I'll be a little bit more concrete, and also why it's relevant right now. I think that we're facing a lot of headwinds to both of these things. So AI, amazing force of innovation, but there are risks, right? So far, it appears that AI models will have a centralizing effect. You've got companies that are building the models or building the infrastructure, and thus far, at least, they're getting bigger and bigger. And the small ones have this issue that they're private companies, and much of the gains are accruing to wealthier insiders and not going to retail. So I think if not managed appropriately, there's an opportunity for AI to actually like leave lots of people out. And I think that's why we've been so focused on private markets access and making sure that this great technology is available to more people, because then they're rooting for it. Then AI's wins and the efficiency improvements and the innovation that causes actually accrues very, very directly. And I think you see that one of the values of capitalism, besides pushing forward innovation and allocating capital to areas where it's most productive, is that it makes people owners. And you know that when you own something, you're much more likely to protect it and to uphold it rather than trying to destroy it or revolt against it. So I actually think in the age of AI, capitalism becomes even more important to make sure that that transition goes well. The other is just outside of AI, wealth inequality, income inequality has been at historic highs. And we think that there's an opportunity. You look at all this government spending that's happening, and in a way, that's the present borrowing from the future. And we need some more mechanisms to actually counteract that for the present to give to the future in the form of investment. And that's where the wonderful things like Invest America, that was part of the recent reconciliation bill, becomes so important. So I think the unifying thread is, if we can further the development of capitalism, turn more people into owners, I think that could have a really positive impact, not just in the US, but globally. And I think the US will benefit tremendously from this because these are like core American principles and reflect our way of life. And of course, downstream of that, I think the best way we can do this is by having a comprehensive financial services platform, a fintech super app. I think I heard you mention that makes it as easy as possible to manage your finances so that you can end up participating in capitalism, investing your capital, benefiting from these innovation industries that we think are going to shape our future, and doing it at the best possible cost and user experience. I think everything kind of points to this one underlying goal.
As you say that, and Nick, I'll get to you in a moment. Nick and Varshika on his team have done the bulk of the work on Robinhood, and they've done an amazing job. And, their conviction level in Robinhood and their usage of it, I would say, has skyrocketed. So
good to hear.
But just on a couple of things you said, one of the let's just talk on private markets. We will get back to that as we're talking about tokenization and everything. Comment or response, just wanted to get your thoughts on this. And again, we'll get into this more as we talk about digital assets more broadly. But this idea of a super app, could it include commerce of sorts? Because that's a real super app, social media, commerce. And the only reason I'm asking the question here is because, we have a view of the digital asset world that investors are going to be consumers as well. Those worlds are going to merge more and more. So just wanted to get your thinking about that if you think it's relevant to what Robinhood's goals are.
Yeah, absolutely. I mean, we've seen this with our own shareholder base. We've got a very, very high degree of overlap between our shareholders and our customers. I think that's pushed us to rethink how we do earnings calls and how much we involve the retail investor community, either, in person when we're doing in-person events and earnings calls, or even just submitting questions and getting feedback. And I think that it seems like we're somewhat unique there, but it's self-reinforcing in a way. So if companies actually engage with retail more and they treat them as a first-class constituency, then retail investors, I think, become more interested in their stocks. They become more likely to invest, and they become more likely to use their products. So we've seen it very, very directly. And I think most companies are frankly underinvesting in this aspect of it. Like they're not thinking about their earnings calls and really their shareholder base as having a high degree of overlap with their customers. And I think it's a missed opportunity. And it's one area where we can help encourage either directly through our products or by actually just setting an example and saying, hey, look at our earnings calls. That's a way that they can be not just informative, but also engaging. And, you're competing for a retail investor's attention. You're competing for their time. And if it's not engaging and they're just not going to watch it and they're going to devote their interest to something else. So I think we're still quite early, and there's a ton of things that we're going to do to make that better for companies.
Yeah, it's interesting. You're getting me to think again. We do a monthly market update, mostly to bring in questions from clients through Say. I don't know if you know the Say technology.
We own it.
Oh, that's right. What am I thinking? Of course. Well, you must be. You have a happy customer, and so we do that, but we do it asynchronously, just because of scheduling, and we have so many analysts involved. But I agree with you. The real time, open dialogue and transparency is very important, and we can try and get at that. In a number of ways. Nick, I know you had a question.
Yeah, well, first off, I'll say I've been a Robinhood member. I was on the first original waitlist. So this has been in 2014. My first account opened was an E-Trade account, and then I was a Robinhood customer and have been for life since then. So
same here, actually.
this is like a dream come true. But I want to go back to, the grand vision. In the gold event, you talked about this idea of the great wealth transfer, $124 trillion transferring from generation to generation. And I'm curious, as you describe private markets, you're going after tokenization, digital banking, Cortex, AI, everything is lining up. What do you define as your biggest moat against competitors as this transfer of wealth comes down from generation to generation? Why do you expect consumers to accrue those assets on the Robinhood platform?
I think the biggest moat is just the product velocity and the innovation that lies downstream of that. I think we're fortunate that we're not competing directly for assets against the most sophisticated incumbents, right? It's not like OpenAI, XAI, and Anthropic are our closest competitors. I mean, we do think of them as competitors in the broad sense because we need the best talent, and those guys have great talent. But a lot of the incumbents where the assets currently sit are stationary market participants. I mean, you have a pretty good idea of what their products are going to look like 5 years ago or 5 years from now, because it likely isn't going to be incredibly different than what they're offering today. And when I think about the wealth transfer, I actually think that there's product improvements that could make that way better for people. And I'll kind of bucket them into two categories that are very, very different, but I think both important. One is, can we actually make financial services work seamlessly across not just the totality of your financial needs, but also across your entire extended family? Like, can I make Robinhood better for you if your parents are on it, or your children, or even your grandparents, and in some ways incentivize more and more family members to bring all of their assets and all of their activities? And I don't really think anyone is thinking about this, because if you use, an incumbent brokerage or a bank, the experience actually is either the same or worse if you add more family members to the mix. There's just no knowledge of your family there. And we've started exploring this with the Robinhood credit card and the banking product, which are really, the family is like the essential primitive. It's one of the key primitives in how the product works. I think we're going to expand it much, much more. The second thing is that it's very difficult to move assets and accounts from one institution to the next, right? And the incumbents actually don't make it easy. It's very cumbersome. Their interest is not to make it easy. It's actually to make it as difficult as possible because they don't want those assets to leave. And despite that, we've been net positive transfers from all major incumbents for many, many quarters running. And I look at our process for moving assets, and it's very, very challenging. There's so much more to do. And I think that's an area where AI could be helpful. Eventually, you'll be able to have your AI agent just migrate an account for you. You'll be able to push a button or type a message, and everything will be done for you. So I think this is like a headwind that's going to recede over time. And eventually, that lock-in will be less of an issue, and that'll just increase and further accelerate the asset flows. I think that'll benefit teams and companies that have better products and that are at the frontier of innovation. So I like where we're positioned there as well.
Yeah, Nick did, I believe Nick did this work about the average life of a bank account. Like how long do we stick with our bank accounts? And when we did that study, which was probably 5 years ago, Nick, I think the average was 16 years. I'd never thought about it in that way, and I'd say that's crazy. It doesn't make sense. It doesn't make sense. This would not be the case in any other industry, but it is in this one for the reasons you say. So I think there's huge opportunity there, huge.
And I think inertia, it's really inertia and friction of moving that's been confounded with loyalty. And I think as these tools get better and as we kind of like move further into and deeper into some of these products, I think it'll be clear that it's not real loyalty. And at the end of the day, loyalty is engendered by offering better products at better price points and just making it as seamless as possible for the customer.
As you approach all of these different products and you move towards this end goal of being a financial super app or a financial operating system, what is the Robinhood philosophy on buying versus building versus partnering on different products? Like, what makes you decide to do what on which of these products? And you're launching so many, as you mentioned, product velocity is a moat. So how do you view buy, build, partner in the grand scheme of everything you're going after?
Yeah, we definitely look to partner. I think that's the first thing. And if there's a robust partnership ecosystem where there's 5 very competitive players that can offer a really good customer experience for us at low price points, then we're I think we're a great partner. And we try to treat all the firms that we partner with like first class. Beyond that, you can't partner on anything. So it's usually, you can't partner on everything. It's usually for components or tools that make up a broader comprehensive offering. Probably, banking, which you mentioned earlier, great example of this. I mean, there's so many services that make up a banking experience, from the cash delivery to the estate planning to all the different folks we work with to provide first-class rewards for our customers, a nice concierge experience. So there's a lot of partners involved, but we have to stitch them together into a cohesive whole that works very, very well. And I think we tend to be builders in that world. In the past, we very much prioritize building in-house because, the acceleration for most things is not there to justify acquiring. We have been very acquisitive as well, and we tend to look for areas where the acceleration will be 18 to 24 months or more, where we're either missing a core competency that takes time to develop or train, or there's licenses or different jurisdictional speed ups that it wouldn't be realistic to get on our own organically. And that's why, you look at our past few acquisitions, X1 team, which became the credit card, we didn't have that DNA of like a strong underwriting team. And we found a team at the right time that had like product and underwriting in a great combination. So that's worked well. Bitstamp brought with us a globally scaled institutional business. We recently announced WonderFi, which had one of the largest Canadian crypto businesses and all the licensure there. Trade PMR, which had like human RIAs. They're a RIA marketplace where it's also a very difficult capability for us to build because the needs that RIAs have, while consistent with what a Robinhood customer would also want, low prices, comprehensive asset selection, access to alternative assets, they're not exactly the same. So getting that marketplace and integrating with it, we very much understood that would give us multiple years of acceleration. So active corp dev team, always look to partner. And then for the majority of things, especially things that are adjacent to what we're already offering, we've always been very build first.
Given that a number of your acquisitions have been in the digital asset realm, maybe we could talk a little bit about that. And I have to congratulate you here. We were asking you about digital assets probably 5 years ago, and you weren't quite ready to move there or pivot there. You were thinking about it, but the regulatory environment, maybe it was 4 years ago, the regulatory environment was just so hostile, and you were going through an experience with the SEC at the time, which I'm sure made you think twice about doing anything that the regulators weren't 100% for. So congratulate you for, laying a lot of or planting a lot of seeds during that regulatory regime and now coming out the other side flying. And your conference in France was fantastic, and I think everyone knows that you've arrived and you mean business. And just want to ask on tokenization, I'd love to know your aha moment there, especially now that you're describing it as one of the, if not the biggest innovations in capital markets history, one of the biggest innovations.
Yeah, so we've been on a journey in the crypto business, as I'm sure you've been very aware of. So we were actually, I think, to my knowledge, the first regulated broker dealer in the U.S. to adopt crypto back when we launched in 2018. And at that time, it was not everyone thought that was a great decision because crypto and traditional finance were in completely different worlds. And, there was some thought that crypto would actually usurp and be a threat to traditional finance and that we would just be putting our existing business at risk, right? We would be putting the regulated core brokerage business at risk by even adding, Bitcoin and Ether and the 7 initial coins we offered on the platform. And back for the first 3 years, it wasn't a huge part of our business. It was just sort of like plodding along, very low volume. We were in the depths of a big crypto winter. And then I think it was end of 2020 where suddenly the market just caught fire. Bitcoin started rising exponentially, and then you saw it with altcoins like Dogecoin in the early part of 2021. And then you saw it go into NFTs and all of these other assets. And then the market cooled very dramatically. You had Celsius and FTX, which I think created a very, very hostile environment, particularly in the US. And I think with that, we sat around the table, and we've got a great crypto team. And we thought that was a great opportunity to actually look internationally, and said, okay, well, in the US, the administration has taken a stance. This was the previous administration, that they don't want crypto here. And it's unfortunate, because we think that's fundamentally the wrong decision. This is a frontier industry, but it's also an opportunity to expand internationally. And we don't want to stop innovating. We want to actually be at the forefront. And in one of these few times where Europe has actually pulled ahead, Europe was making a concerted effort to pass comprehensive legislation with MiCA and MiFID. So we went there, and that actually laid the foundations for what we announced in Cannes, because they had policies around tokenized instruments and ICOs and crypto derivatives, all things that we were able to launch. And the US now has a very, very sort of like forward-thinking administration that wants to be at the forefront of crypto. And you've got David Sachs, and up until recently, Bo Hines was there pushing this forward as well. And I think a lot of them looked at what we announced in Europe and said, well, this is a great sort of like blueprint for what we should be having in the US. We can't have the Europeans be at the forefront of things like tokenization. So my hope is that people all over the world look at what we've got rolling out in Europe, and they see an example for how much better, more efficient, more user-friendly financial services can be if crypto and traditional finance were able to fully merge. So I think I started with this impression that they were going to be kind of antagonistic, and over time have evolved to these are going to be one and the same in the next few decades. And in the same way that like traditional finance has gone through several technology and transformations, from pencil and paper to mainframe to cloud, blockchain technology is sort of the next one in that chain of technology transformation.
Was there a particular aha moment, or it was just brainstorming around all of the difficulties here in the United States? And you're right, I had forgotten that you had started in 2018 with Bitcoin and Ether. And then the regulators came in. It wasn't a big part of your business, but sure, you were there fair. As you said, we were the first public asset manager to gain exposure to Bitcoin in 2015. So you validated our decision hugely. And so I thank you for that. I shouldn't have forgotten it. But was there an aha moment when it came to tokenization?
There was, and it was actually in the depths of the crypto winter. I think end of 2022, maybe early 2023. I was sitting down with Johan, who's our crypto GM, and a few other members of the crypto team, and we were like, "Well, we're in the depths of the winter, but we've been through this now, at least 3 or 4 times since the beginning of crypto. There's going to be a summer again." And you remember DeFi summer? I think it was summer of 2020. We're like, we want the next summer to be Robinhood summer. Right, where it's not just DeFi, but what it can be is real assets that have fundamental utility being on blockchain technology. And we'd feel very proud of ourselves if we were able to kind of like kickstart that, because the criticism of crypto as an industry for a very long time have been that it's kind of Bitcoin and meme coins and these things that aren't tied to fundamental utility or production. So if you can figure out how to connect it to real things where they get all the benefits of blockchain technology, I think that becomes a very transformative thing that nobody really should have too much issue with. I mean, people will always find ways, but I think the arguments will be detailed rather than high level. So that was the idea. We called the project Robinhood Summer, and it was always behind, well, what are the key advantages that Robinhood has? Well, we're scaled in traditional assets, and quite scaled in crypto, one of the largest retail platforms there. So at the intersection of those is where our core competitive advantage is. And that's really what tokenization is. It's just applying real world assets and putting them on blockchain rails. And I think we got even more excited when we figured out that we could do this for all kinds of assets. Take any asset, not just a public equity, which already through traditional means is tradable 24/5 with an easy interface in the US. But can we take all kinds of assets, illiquid assets, private companies, eventually real estate and art, things that high net worth individuals get exposure to and are a significant portion of their portfolios? Can we take those assets and make them available to everyone? And once we figured out that we could do it with the same technology, we got even more excited. And I think we were able to demonstrate the whole end-to-end with working products in CAN, which made it extra special because you have all these people writing white papers and talking about it. And I'm guilty. I've written white papers and talked about it for quite a bit. But what I think makes a huge difference is actually shipping product that millions of customers can use right away. And we were able to launch tokenized public stocks along with the private stocks stock token as a giveaway in CAN a few months ago.
When you're thinking about this evolution, this back and forth brainstorming, and you're starting to see all of the different avenues you can go after in terms of tokenization, when did you realize, the Robinhood chain would be core to what you'd want to do around tokenization? I don't see a chalkboard, so I realize you can't draw it all out for us. But I'm just
too far away.
And that's a real. By the way, that's a real world asset. I think you should tokenize because the value of that. I mean, hang it in the Louvre. That's that's a piece of artwork. It's an NFT.
We were gonna throw it away. We were like, how are we gonna move this chalkboard to the US? And I was like, you know what? At any cost, I'll pay for it personally. So we did keep the chalkboard. Yeah. So our own chain, I think we were debating this decision quite a bit. Like it wasn't a clear decision by any means. And I think the trade-off was between getting an established chain that maybe had like tooling and wallets and existing support, particularly in Europe, which is a market that we're just a very new player in, versus having our own chain, which allows us full control over the entire end-to-end experience. And that's both economics, since we get the sequencer revenues and the flexibility there, but also flexibility in development, so that we can do things like gasless swaps, control the gas fees. And I think at the end of the day, we realized that taking a bet on us being able to get the adoption was the worthwhile bet, and that the control upfront would be much more valuable to us. Like, I think it's a short-term versus long-term decision. Long-term, the control would be much more important, and it would allow us to build better products. And plus, the technology behind these roll-ups has gotten so good to the point where you're not really missing much. And if we build something really good, we know that there will be bridging technologies and developers will come on board, and eventually these assets will end up on all chains anyway. So it wasn't obvious, but I think at the end of the day, we chose this because it was the best long-term outcome.
I think Circle was a bit of the ChatGPT moment in the digital asset space. Certainly from a traditional, investor point of view, it really caught their attention. And if they weren't paying attention before, they are now. They have to. So I just would love to know if you think the stablecoin market is going to be a winner take most supported by the network effect, or if you think it's going to go much further than, USDC and USDT, Obviously, you have high hopes, but just have you thought about that and the network effect, since you enjoy the network effect and are using it to your benefit so effectively?
Yeah, I think this is a more specific instance of tokenization, right? If you think about stock tokens, which is the product we launched in the EU as tokenized equities, stablecoins are basically tokenized treasuries or US dollar cash equivalents. So these were kind of, Circle is sort of like the first example of a tokenization business showing the power of this technology. And I think it's become pretty clear that there's basically two major benefits. So internationally, it's become the best and most direct way to get exposure to US dollars. So folks, particularly in developing countries where the local currencies are inflating or hyperinflating, they go to stablecoin to just get exposure to US dollars as a flight to safety. And that's been a huge thing outside the US. Inside the US, where we already have established ways of getting access to US dollars, it's been really more about the 24/7 transactions and the instant settlement capabilities. On a corporate level, that's why we adopted stablecoins, because we need to settle up on weekends for our crypto business, which trades 24/7, and the banks are closed on weekends. So if we have to move money between two banks for a counterparty settlement, stablecoin is sort of the best option. And I think the future there is a stablecoin that distributes yield, because right now there isn't a strong incentive to hold assets in stablecoin form. So it's purely a point-to-point, almost like a funding rail. You can think of it as a better version of RTP or RFP in the US. So most people just convert to stablecoin, make the transfer, and it's converted back on the other side, which I think in the US doesn't capture the full value. If you want people to hold in stablecoin form, particularly in a high interest environment, we have to figure out how to distribute the rewards to all holders. And that was really the design behind USDG. I think it's going to shake out pretty similarly to for tokenized equities. I think that the benefits outside of the US will be that it's going to become the best way to get exposure to US equities. And, in a lot of these places, it's very, very difficult to plug into traditional equities via their existing rails. But these folks have crypto wallets, right? So I think they'll become the dominant vehicle for US equities distribution outside the US. And within the US, it'll be about 24/7 trading and instant settlement, which are valuable things, but very, very, very different than the international value prop, which is going to be very much just access.
And so network effect, just a few at the end of the day?
Between whether there'll be many stable coins or just one, I think they kind of like break down in two categories. So you have the unregulated stable coins like Tether. And that one, I think, does have a strange type of network effect, because if you're an unregulated stable coin, people are going to have a hard time trusting you at first, because they're not going to know, what the reserves are. And I think that's, a negative. But if you look at Tether, they've sort of like gone through so many of these crises and questions about their reserves over a period of 10 plus years at this point, that they have sort of like a brand network effect where people trust it because it's been around for so long. So I think there's definitely something there. And then you have the regulated stable coins, which are in effect holding buckets of cash and treasuries. They're very transparent about their reserves. They're registering in multiple jurisdictions, and I would put USDC and USDG, which is the one we're a part of, in that bucket. And, I see a world where there's lots of these, right? The cost is to operating and maintaining one is going to be pretty low. There's actually companies that are getting funded and starting right now that are going to help facilitate, a corporation creating its own stablecoin and issuing it. And yeah, I see a world where there's going to be a lot of these. They're interoperable with one another. And I don't know what the exact dynamics are, but I don't see it being winner take all. I think it'll either be there's sort of like these core platforms that distribute the rewards to members. So it's effectively like each of them having their own stable coin, but they have one unified brand. Or the big platforms will be launching their own, and they'll be interoperable with every other one.
Vlad, not to bring us back into the boring world of TradFi, but I had a question in your lending business. As you expand into more consumer credit lines, how do you think about the trade-offs between what you're doing with Sage Home Loans and some of your other existing credit offerings?
Yeah, I think the core thing that we try to optimize for is what's the best customer experience at the end of the day. And we kind of work backwards from that. And I think in financial services, perhaps more so than any other industry, the economics are a key part of the customer experience. You kind of can't separate out the two. So I'll give you an example of two of our lending products right now. Our credit card, which is at the end of the day a lending product. It's spending and lending hybrid, but we expect to have a substantial loan book driven by credit card loans over the next 5 to 10 years. And it's continued to grow quite rapidly as we've been rolling it out. There, the value prop for the customer is getting liquidity, getting access to sort of like small loans around your spending. Is very much traditional credit card business. And our philosophy is how can we pass back as much of the economics as possible with the money that we're saving from running it lean, operating with technology, having the rewards be so high that we don't need to spend marketing dollars. And it seems like the thesis is playing out very, very nicely. So we've had more confidence. We're continuing to scale the rollout. And then the headliner is 3% cash back. So it's a very good spending instrument. On the margin side, margin book reached a record high for us recently, 11 billion in margin loans we announced at our last earnings. And that's up more than double year over year. And what allowed us to do that was, a year ago, we weren't very competitive on margin. And that was, we saw that was sort of like a problem with our active trader offering, because a lot of active traders use margin. They like to be able to increase their buying power and sort of like buy things without having to sell existing stocks. And we developed our risk management system to a point where we felt very, very confident competing. And so we changed our rates and we made them the best at every tier and really streamlined the experience of being a margin customer as well. So operated that internally, and that's been going very, very well. So in each of these cases, we are taking on balance sheet. But over time for the credit card business, we expect to be able to monetize and securitize those loans, sell them, but we have to develop that track record to do that. Sage Home Loans, that's very different business because we're doing that through a partner. So not on balance sheet. And in fact, we're doing the vast majority of the economic sharing to the customer. I think maybe even all of it. I think all of the economics are coming back to the customer in the form of a low rate. And our thinking there was, can we test how important mortgages are? And can we actually measure that in terms of impact on our gold subscription product? Will we see more gold subscribers, more retention with the product? And can we actually how's the ROI of this offer? And I think that does two things for us. One, helps us evaluate mortgages as a bigger business opportunity and will give us clarity about how big we wanted to go there and how quickly. And then two, are there other things like that? Can we just like use the partnership model to give you access to any service you might want, and then we can plug it into our customer experience in a very nice way and actually be able to help you with every single one of your financial needs on Robinhood.
So exciting. We have another part of our DNA that is very similar. We both want to educate our clients. As I often say, we want to educate not only investors, but students and their parents and grandparents about how this world is going to change and how quickly it's going to change. So it's one of our core missions and values, and I think it is yours as well. Right now, I have to say I've used Bloomberg for my entire career, which is for quite a long time, that is. And it is the cost is up to $26,000 per year to use. And recently, Nick knows very well, because when the technology is not working and I'm losing productivity, I am not a happy camper. And they can't fix some of the things right now. They just can't. They can't do it, which is fascinating to me. So for the first time in my career, I am thinking, I am going to have to switch services. And I know Robinhood is not ready for me in many ways, although in many other ways, you're doing things that, I probably would never think of doing. So I have to learn more about what you offer. But in terms of your retail client base, your investors, how does Cortex help in this regard in terms of education?
Yeah. So we announced Cortex at the Gold event a couple of months ago, and we didn't want to just put a chat bot into Robinhood app and do it that way, because we felt like pretty much everyone else does that, and it doesn't work very well because it's not integrated into the experience and you don't really know how to use it. So it's not immediately clear what problems it solves for you. And we came up with, so instead, we asked ourselves, what are valuable things that are currently hard to do in our app where, these new AI technologies can really help? And we had two use cases that kind of bubbled up from that. One is just figuring out what's going on with a stock. So a lot of times, if you're a Robinhood user, you'll get notifications that some stock is up 5% or down 5%. And your immediate question is, why? What happened? Is this some macro thing? Did something happen with tariffs? Did the company miss earnings? Or is there something else? And the first product, Cortex Digest, just answers that question directly for you. You can tap into the stock detail page, you can see a digest, and it attempts to answer and cite sources for exactly what's driving the price movement of the stock. And that's been incredibly well received, like very, very high customer satisfaction since we've rolled that out quite recently. The other use case is very, very different, but also very valuable, which is customers have an idea, they have some kind of point of view for what a stock is going to do, and they want to make a trade using options. And Cortex Trade Builder actually tries to connect their idea with the ability to make that trade. And that's rolling out soon. And the idea there is, options trading is very complicated. You have to learn a lot of things, particularly if you're doing spreads or multi-leg options. And can we streamline that process for you so you can say, this is what I think it's going to do over what time frame, and we can actually present options trades that help you achieve that goal. And I think in doing so, there is an educational benefit because you're going to learn how options trades are constructed and develop kind of an understanding for how it works. And those are the first two. And there's going to be more. We've been actually working on a lot of stuff that is making its way into product that takes advantage of frontier AI models. And I think the underlying theme is it's going to be very, very integrated into the Robinhood experience. And it should just work in the way you expect. And when we introduce it, we'll want to make sure, as with Digest and Trade Builder, that it adds immediate value and it's very, very clear how to use it and to what benefit.
Are you finding any one of the frontier models better than the other for your purposes? Each of them has its own strengths and weaknesses, I know.
Yeah, and actually, we use multiple, and we've gotten into fine tuning and distilling our own models for different purposes, and also getting into some pre-training of usually small models that are bespoke as well. Very few things need like exceptional intelligence in our field. So obviously there's a trade-off. There are some things that are more complex that you'll want, the very high thinking models. But for most things, actually, a fine-tuned open source model just does the job very, very well and gives us the control to actually specify how we want the behavior and the guardrails to be. So we've been doing a lot of that. And I actually think the extent to which we've transformed the internal operations of our company with AI is not really broadly understood. I mean, if you use customer support at Robinhood with very high confidence and high accuracy, your query will be answered by our AI system. And we've looked at all of the vendors that offer these services. They haven't been able to meet our needs because it's very, very hard to integrate everything that we need with our systems and have the AI system actually take action safely. So I think we're actually at the frontier there. And we probably need to talk about it and share what we're doing a little bit more. But yeah, the team's done a very nice job, not just like with external facing products, but just imbuing it into all of our operations, particularly engineering and customer service.
I want to touch on Robinhood Legend, and maybe just this is a comment that will lead into a question. I think it's pretty fair to say that Robinhood is redefining what it means to be a retail investor. You talk about giving access to private markets, tokenization. You're giving so much in this value prop that is the Robinhood platform. One, what do you say to critics that may be out there saying, no, they shouldn't have access to private markets. No, they shouldn't have access to margin. They shouldn't have access to these more sophisticated tools because that has always been gatekept by larger players. So that's one question. And I have a follow-on after.
As you can imagine, that particular type of criticism you don't get a lot. Nobody's going to say, well, they've always been gatekept, so we should keep doing that. I think by and large, it's sort of like this paternalistic kind of nanny state thing of, these customers aren't sophisticated enough to have access to these tools, and we should like protect them from themselves. And we see our customers, they're incredibly sophisticated. I mean, the way that they analyze information, just scour the internet for sort of like all sorts of data that you and I probably wouldn't even think to look for is incredibly impressive. I think retail has adopted the internet and social media for investment research to a degree that now rivals some of the best institutional analysts and investors. Even with our earnings calls, we have our institutional analysts, and then we have these retail content creators that are on YouTube and X, and the analyses that they produce and the way they study the company, I think is on par, if not exceeding, some of the institutional folks. So I think the idea that they shouldn't have access to private markets or other sophisticated investment tools, is just nonsensical, particularly in a world where the conditions that led to a lot of these rules being promulgated no longer exist. I mean, a lot of these rules are pre-internet. It was hard to get information about private companies. It was hard to actually communicate disclosures appropriately because a lot of transactions were either done in person or on the phone. How are you going to communicate risks and disclosures on the phone? Nobody's going to hear, your broker reading a 5-minute disclaimer to you, right? And nobody's going to read the 10 pages in person. So I think they were promulgated with reasonable, like for good reasons. But now we've got AI that can distill all the information for us. We've got really nice interfaces where, for example, you can make it very clear to a user that, hey, this is a risky investment. It might not be for you. It's a private company. And you juxtapose that also with being able to invest in whatever meme coin you want. You can buy any amount of any meme coin on DeFi or CeFi, and that's pretty much completely fine. I think something has to change with private markets.
Yeah. I know we're right up against time, but my next question was just around the value prop, not just of Robinhood, but of gold itself. It's $5 a month. I'm on record on X saying that it's not just the best financial services subscription money can buy. I think it is point blank, period, the best subscription service money can buy because of the value prop.
Well, that's high praise.
And how much you've packaged into it. So I'm curious how you think about, scaling price, how user satisfaction plays into that, where you see it going over time. And, at $5 a month, the ceiling is high. I don't want to get you in trouble with users by saying, yeah, of course, but I think everyone would expect that this has to go up at some point, and just what you think about and how you think about, that inevitable, we're going to have to raise this at some point.
Well, thank you, first of all. That's high praise that that you're putting it among the best subscription offerings. Because, Spotify is pretty good too.
Not many subscription services pay you back, which is what gold does.
No, I think that we obviously have, I think we've gone from gold being frankly not very good 4 years ago to people telling us that, we should raise the price, which is a good place to be in. I think we're in no hurry to raise the price. I think that the price could be higher for sure, but the main priority is to round out the suite so that all of our customers are gold subscribers. So I much rather have industry-leading retention, industry-leading attach rate, and I think we're heading there on all dimensions, and know that we're communicating what gold is and how much value it provides, as well as we could possibly be communicating it. And then I think we can turn our attention to whether we have the right price. We've done some experiments with it. I mean, we experiment with everything, and we kind of like what we're seeing. I think there is we obviously have an ability to increase the price, but I think that what we've got is a very compelling offering, and certainly price is not standing in our way. I mean, it could be standing in our way of making more money, but customers love it, and that's the most important thing.
Vlad, Nick, when you say high praise, I think you don't even understand. I sat in on one of our lunch and learns recently and learned about different subscription services and loyalty programs. I mean, the extent of his team's knowledge is unbelievable. And I think that you have hit into such a rich vein, I think, out there. I can't imagine anyone from my generation bubbling over with excitement about any product that has ever come out. So I think it's incredible what you're doing. We're just so happy to be on this journey with you, and anything we can do to help you, we're here. And one of the things that you're doing to help us, and I think we're doing to help you, is this podcast so that people can really understand how profoundly you are changing the financial world. So thank you so much.
Thank you.
Thank you. And, you guys have been on the journey with us from the very beginning as a public company. So, yeah, I've appreciated all the ups and downs, and we're still here, better than ever. So,
Yay.
looking forward to many more years.
Absolutely.
Absolutely.
Likewise.
Thank you so much. This is a pleasure.
That was Vlad Tenev from Robinhood. Nick, what surprised you from that conversation? What did you learn that you didn't really appreciate before about Robinhood's position and his vision?
Yeah, I think, the line of questioning we tried to take in this is understanding the trade-offs and the decision-making that goes on at Robinhood and how they approach these markets because they're going after so many new products at the same time. How exactly, as a company at this scale, do you execute at a high level, go after all of these different products, and then decide to, I think my favorite question was the buy, build, or partner, and understanding, when do you decide to make the decision to build a product versus to go out into the market and buy something versus partner. And just hearing his response to that gives me comfort in the way that, they're approaching everything that they're going after, because it would take us 20 minutes to list off every new product that they're trying to build out at the same time. And the only way to keep tabs on it is, luckily they're very good and they like to host events. So, watching and understanding, but, they're going after professional trading, they're going after crypto and continuing to build out this banking product. Then they're building in Robinhood Cortex. So understanding how they conceptualize and approach all of these different products was, very informative to me, just because, from a bird's eye view, when you see all of this, one might say, okay, this is a lot all happening at the same time. The execution risk is extremely high, but I think when you hear from Vlad, I took away a lot of comfort in the way that he was able to explain everything that they're doing and why and how thoughtful they are and how they approach and why they decide to build versus buy versus partner.
I thought it was interesting when he talked about the family as a primitive within kind of like their understanding of their customer base and data structure. And just thinking about, there is a lot of friction to switch assets over, and how, he pointed out that as of now, having family members on the same brokerage has no kind of mechanical difference to the individual consumer. And a smartphone first app actually tends to atomize families, as in, like, you have to have a separate Netflix account from your spouse, and because you have separate devices, or you share the same Netflix account, but all of your preferences all get bled together. Within financial services, it's actually, there's a lot of, efficiency you get out of kind of sharing kind of assets and bank accounts. And, it's like my wife and I have a shared bank account because it would be really inconvenient not to, and kind of generational sharing of the same platform could lead to better stickiness and actually better product design for kind of the application, including kind of like doing smart kind of tax management strategies, but also just making sure that kind of like that generational wealth gets passed down in an efficient way into kind of their platform. And so I'm interested to see how they build out the product to support that primitive. Regardless, it was a really interesting and engaging conversation. Vlad is clearly a visionary leader of the organization. And it's amazing how, Robinhood has gone from the platform on which you tried to take super long call options on GameStop and induce a short squeeze against some meme stock to a real kind of breadthy financial services platform that people rely on for an increasing percentage of their financial lives. I'm interested to see how it develops over the next few years and decade. Nick, thanks for coming on FYI. listeners, I hope you enjoyed the conversation. Please like, subscribe, and rate us highly on your favorite podcasting app or your least favorite, all of them, and follow us for more content.
Thank you.
ARK believes that the information presented is accurate and was obtained from sources that ARK believes to be reliable. However, ARK does not guarantee the accuracy or completeness of any information, and such information may be subject to change without notice from ARK. Historical results are not indications of future results. Certain of the statements contained in this podcast may be statements of future expectations and other forward-looking statements that are based on ARK's current views and assumptions and involve known and unknown risks and uncertainties that could cause actual results, performance, or events to differ materially from those expressed or implied in such statements.
Thank you for listening to this episode of FYI, the For Your Innovation podcast. If you enjoyed this episode, please hit that like button and make sure to leave a comment down below letting us know what you thought. And if you haven't already, please make sure to subscribe to the show and follow us at ARK Invest on your favorite social platforms so you stay up to date whenever we drop a new episode.